Your accountant says you're profitable, and your bank account says you're broke as a joke. So, what the hell is going on? Yeah, let's talk about this BS. And by BS, I mean balance sheet. Oh, yeah, don't leave yet. I promise this is not another accountant talk video where it's just womp, womp, womp. I swear it's going to make sense. My name is Sarah Bryson. I work with business owners who want clarity, control, and killer cash flow. And that's why I like to talk about their balance sheet in a way that actually makes sense to them. So, what I want you to do is think about it like a kitchen and a bunch of meals and food. Because I am a big fat kid at heart. I love food. Things come back around to food. So let's start off real quick by what you're probably thinking when you're thinking of your balance sheet is something gross like this, right? It's super boring. It's a bunch of numbers and some lines and blah, blah, blah. No one really likes it, right? But it's important because we're looking at our assets, our liabilities, and our equity. And that's really what all of our businesses come down to are these three portions, right? Now, here's how we can start making this stuff make sense, right? We're going to start at the top and just work our way down. We're going to start with our assets. So our assets are everything that we own or control that can create value. And I want you to just think about this as ingredients or meals, right? So your bank account, the cash you have in hand, the inventory that you can use to create more products to sell or something that you sell directly. Your accounts receivable, which are just all those invoices you're waiting to get paid still. These are all assets. These are all the ingredients that we can use to create a meal. We love meals. We love to eat. But you know who else likes to eat? Liabilities. So, yeah, we've got liabilities. Most of us do. Totally normal. So, liabilities are what you owe. It's those hungry mouths that got to get fed before you can actually sit at the table and eat yourself. This is going to be a credit card. It's going to be a line of credit or a vehicle loan. Anything where you have promised, hey, I'll pay you this if you can give me this for, something up front. And they're like, sure, this works. Well, we got to feed them, right? We promised them a meal. We got to make sure they get taken care of. So once we have our ingredients and we've made our meal, we have to make sure that they get a portion of it. And then what happens, right, is you feed everybody else first. Liabilities get satisfied. Then anything left over is your equity. So literally, equity is your leftovers. This is anything that remains in the pantry or that we package up so that we can reuse it later. It's everything left over. It's the assets minus the liabilities, equity, everything that's left over. And we love equity. We love having positive equity because what does that mean? It means we've got plenty of money hanging out in the bank account, in our invoicing system to not only cover everything that we owe to people, but to pay for future bills, to pay for upgrades, to pay the owner, right? So let's talk about how this can go out of whack really quickly. If we're in a situation where we don't have enough assets to cover all of the liabilities, we're going to go hungry. We're not going to have enough left over to make those future meals, to have leftovers, to feed ourselves, to feed our future business needs. And that's why it's so important for us to keep an eye not just on that profit and loss report, but also on our balance sheet. That's where the disconnect usually happens between profit and our profit and loss and the balance sheet and our bank account. You can think of it that way too, is one is just talking about regular old money in and out for every day. And then when we're looking at that balance sheet, we're really looking at an overtime picture of what we need to pay to these extra mouths versus just our day-to-day activities. And now when you're looking at your balance sheet, this should look a little different. Yeah, we still got all these lines and these numbers and accounting terms, but it makes a little more sense, right? We've got our assets, that's what we own. That's what we can turn into meals or money in the future. The liabilities are just the people that we gotta feed first, and then equity is left over. If you find that you're in a situation where, hey, yeah, my accountant says I'm profitable and I definitely have a tax bill, but my bank account says that things are not going in the right direction, you might want to take a look at my 10 questions every CEO must be able to answer. It's probably going to give you some good information as to the whys behind that. Go ahead and grab it, totally free, and really sit down and think about your business in maybe a new light. Take a look at your balance sheet again, or maybe for the first time, and see if it looks a little different to you. And hey, you know what? Maybe I am crazy pants. Let me know down in the comments. Did this help? Does explaining the balance sheet in food terms make sense? Does it make more sense now? Or am I off in la la land and this is even crazier and weirder than it was before? Let me know, because my goal is to always help you and help you find a way to make your business and your business's finances make sense. Because when they do, you make better decisions and you move forward with that clarity, control, and you get the killer cash flow. Thank you so much for joining me today. Go forth and profit, everybody.